Yo guys, so today I'll be breaking down what is SMT Divergence. A lot of people have been asking me to make video on it, so I think now it's time to do so. I'll be explaining in this case the NQ and the S&P 500. So I'll be breaking down details, showing some examples in the chart, and yeah, let's get into it. Alright, so first I'm going to be starting off with correlation. What is correlation? What does correlation mean? Correlation basically when two correlated pairs, right, with two pairs, let's say NQ and ES, Euro USD and Pound USD, they move together, right? Like, so if NQ is going up, ES should go up, should follow. Same goes for Forex pairs. Let's say Euro, if Euro is going up, Pound USD should also go up, and so on and so on. So in this today we'll be covering the NQ and ES. So that's very important to detect the SMT, which I'm going to explain it now. So what you need to know is correlation. If NQ is going up, ES has to go up. If NQ is going up, ES is going down, which is very rare, doesn't really happen a lot throughout the year. That means these two pairs are not correlated, and this is a signal telling you to not trade if NQ and ES are not aligned, or any correlated pairs. If they are not aligned together in the same direction, try avoiding that day, because it's gonna be choppy, or like one pair is gonna go up, the other pair is dragging it down, and gonna, it will mess up all of your technical analysis. Okay, now with the big boy. SMT. What is SMT? SMT stands for Smart Money Technique. It's basically when one pair makes a move but the other does not follow. What does that mean? All right, so in theory, let's say NQ is going down, all right, that's NQ, and then ES is also going down, all right, but notice something here, 1 second, like that. So what happened here? You see here we have a lower low, and we have a lower we have a low here, we have a low here, all right. NQ swept that low, ES failed to sweep that low. So this right there is an SMT divergence. It means Smart Money Technique divergence. It means NQ swept that low, NQ created a lower low, while ES failed to do so. It creates instead a higher low. So this tells us there's a potential reversal for the current trend, right? So ES is the stronger pair, NQ is the weaker. So longing on ES is the right choice. So whenever we see an SMT, right, if the pair that did not sweep the swing, right, is the stronger, if we are going longs, right? So put that in mind. Again, NQ here failed to sweep that low. NQ swept that low. ES failed to sweep that low. There's a divergence here. That means there's a very high probability that the price will reverse. If not reverse, at least retrace to the 50%, right, of the Fibonacci of the range, right? So the good long should be on ES, right, because ES is the stronger pair. Now let's flip the thing. Let's say if the market is going up, right, NQ is going up, right, and ES is going up. So now NQ failed to sweep that high, but ES swept it. So that is an SMT divergence. In this case, we do short on the NQ. We short on the NQ. We do not short on ES. Why? Because NQ is the weaker pair, right? There's a high chance that the NQ will dump higher than ES, right? Because of this sweep, right? So whenever you detect any SMT, you need to check which is stronger, which is weaker pair, and then you enter with a stronger if you are going long, and shorter, the weaker pair if you're going shorts. It is confusing, but I'm gonna repeat it again. If we wanna go longs, we look for a stronger pair, a pair that did not sweep a low, like here in this scenario. NQ sweeps that low, ES fails to sweep that low, that means ES is a stronger pair, we long ES. For the other example, if you want to short, in this case NQ failed to sweep that high, but ES sweeps it. That means NQ is the weaker pair, we short NQ. But if NQ sweeps that high, ES did not, then we short ES, because ES therefore is the weaker form. Okay, just put this in mind. That's the theory behind it. Now I'm going to go to the charts and show you some examples. All right, right off the bat, I want to explain something very important. How do you detect an SMT, right? You basically see the SMT between a swing to swing. For example, here we have NQ and ES, right? That's on the 15-minute time frame. And by the way, this works on any time frame: 1 second, 5 seconds, 10 seconds, 15 seconds. Obviously, the higher time frame you go, the stronger the SMT like proves itself. For like the swing traders, when you see an SMT, is a lot of people just increase the risk like by crazy, right? Because that is a potential reversal or a deep retracement. Okay, so in this case, NQ sweeps London high, but ES failed to do so, right? So what do we have here? We have an SMT divergence, a swing to swing. You need to make sure it's a swing to swing. How to check if there's an SMT divergence, right? You need to go up here to the layover, the layout setup, and make sure you enable the crosshair here. So the crosshair means when you hover your mouse, if you see my mouse, if you hover the mouse on top of the swing, you will see on ES there's also a swing, right? So we have a swing here and we have a swing there on ES. So you mark this, that's the high, and that is your SMT. And here the same swing, that's the here SMT, right? Oops, sorry, that is the SMT here, because that is not SMT, that's the SMT. Why? Because we agreed it should be swing to swing. That's a very good example here. So that's the SMT here. You do not pick that wick, right? Because that wick is not a swing on NQ. You see, it is just a normal candle on NQ. That is here we have a swing. Also on ES we have a swing. On NQ we have a swing here. On ES we do have a swing, right? That's how I use SMT. Some people use SMT between candle to candle, like that here, candle to candle. Here we have an SMT. That candle here and that candle there, there's an SMT. That is a good SMT, but not a really strong one, not the one that you actually rely on. So I'd rather see a swing to swing SMT, which we have here. So in this case, ES is the weaker pair. Okay, so you short on ES. Personally, I do not care whether if ES or NQ is a weaker or stronger pair, because I only trade NQ. I do not like trading ES, right? But when you're talking about higher time frame, like when you go like 15 minutes and more, yes, this means a lot, you know, like this has a higher probability, the weaker or the stronger pair, to enter position on. But since I scalp, I actually do not care which one is stronger, which one is weaker, because I want to go in and out, right? Just take my my profits and just run away. So here, that is an SMT. I'm gonna check another SMT. We do have an SMT here as the low. We do have an SMT here. So that swing failed to sweep that low, but ES, that's a Tokyo low, did sweep it. So in this case, NQ is the stronger pair to long on, right? Here. Sorry, what the hell is this? My bad. SMT. NQ failed to sweep that low. ES did sweep it, so NQ is a stronger pair to long. All right, that is like as simple as that. I think that's pretty much simple. I'm gonna show more examples here. Is that a swing? Yep, that is a swing. Have here. No, but that's not a swing, so that is irrelevant. But here, SMT. Okay, we do have an SMT here. That is a swing, right? Swept. Tokyo swept that low, and that's ES. ES fails to sweep that low, right? So therefore, that is a SMT divergence. And you note, well, obviously ES is a stronger pair, but do you notice that whenever we see SMT, the price fully reverses? Like, look, here we have SMT, SMT, price reverse. Look here, SMT, SMT, price reverse. Look at there, SMT, SMT, price just completely dumps. So it's just a very strong point of liquidity for me. Like, whenever I see an SMT, right, I just go all in. I actually increase my risk. So that is for the 15-minute time frame. Let's go for the 1-minute time frame. Okay, let us check on the 1-minute time frame. The higher the time frame you go, the higher win rate it is. Let's see here. So we have here, that's a swing, right? So look, ES on the higher time frame, it was weaker, but on the lower, weaker, but on the lower time frame, ES is the weaker, not NQ. Look, so that's the high, that's the high on NQ. ES sweeps it, NQ failed to do so, so NQ is the weaker form, but for me, I actually do not care. So we have an inversion here. You just enter shorts. And one important point, a good stop loss for you to have is the invalidation of the SMT, which is here. In this case scenario, that's a big stop. I don't go for it, right? But you want to have a decent stop, but like you want to make sure if there's an SMT in place, you place your stop loss on the invalidation of the SMT, which is here. That is a very protected level, right? And the price dumped further, but that's a big stop, right? I wouldn't. That's why yesterday I did not take that trade. But yeah, I'm gonna move on. That is a proven SMT. Here, that's a failed SMT. We have an SMT here, but did not work. Yeah, here. That is an SMT. That's the low. That is the low. NQ is stronger. No, here. Boom. It's this one. Wait, it's this. What is this? Yes, here. Okay. So, I'm tripping, I guess. Yeah, this one. Sorry, my bad. That is the SMT. Okay. NQ failed to sweep that low. ES did. So therefore, you long. I mean, you long ES in theory, but I don't care. I just long ES no matter what, right? Just long ES. The price did move up, and then it went back down, created another SMT. So your stop should be, let's say, there's an entry here on that version here. Say inversion. Your stop will be at the invalidation of the SMT. You'll get stopped, right? And then we have another SMT here, or do we? No, we don't. We do not have an SMT. Do we have any SMTs? Nope. No SMT. No SMT as well. So see, there's no SMT. So I use SMT personally for potential reversal. Here, it was a SMT, but it was a failed SMT, right? That is why it was a failed SMT. But I cannot see any SMT for a potential reversal. The price was choppy yesterday. Nope, no SMT, so you saved yourself. Probably you could have moved to break even here earlier, but the price wants to chop. Here the SMT failed. Let's go to another time frame. I mean another day when there is SMT. always look for SMT if the price sweeps liquidity. So don't just look at SMT anywhere. You need to make sure that the price sweeps a high time frame liquidity, such as previous daily high, previous daily low, Tokyo high, Tokyo low, London high, London low, or any like key level you guys are interested, support, demand, order blocks, support, like any liquidity that you guys know, right? On the higher time frame. Then on the lower time frame, you just wait for an SMT and then you enter. Let's see here. SMT. We don't have an SMT. We do have an SMT here. That is our SMT. High and low. ES creates a higher high. NQ creates a lower low. So that is a retracement. The price respects that SMT, went down, and then so that SMT was a retracement. So you can get something out of the retracement because of the SMT, right? And then went back up. But when it went back up, do we have an SMT in place? No, we don't. We do not. Okay, so here that was our only SMT. And then while going up, do we leave behind an SMT as well? No SMT. No SMT. Here, I think we do have an SMT here. Nope, no SMT. All right, other day. I want to just walk through and show you how powerful SMTs are. Just like for you to practice, just open the chart and just mark all of the SMTs and see how the levels react based on the SMTs, and see, because your stop has to be at the invalidation point of the SMT, you'll understand how broken or strong SMT are. It's really strong. That's why I use it only for reversals, or if the price is too extended for me, then if I want to re-enter with the continuation, I wait for SMT as a signal for me. We do have here, I think. Nope, no SMT here. We do have an SMT there, though. The swing. Okay, so that is that's your SMT. Here, NQ is creating higher highs, ES creating lower lows. So you have also SMT there as well. Here, so that is the first SMT. So looking into like here, that is our first swing, right? ES lower low, NQ higher high. So let's say you entered here of the inversion. Your stop should be at the last swing low of the SMT. So look, the price literally respected it, right? So here you'd move to break even, obviously, because of 1-to-1, and then you'll have another SMT in place, and then you can re-enter. Or if you're not a fan of break evens, then that's fine. Another SMT as well. You enter here, and then the price just flies. Okay. Just hover on the chart. Make sure you have the crosshair enabled, and then hover on the mouse. Make sure it's a swing to swing. Do not take candle to candle. Do not FOMO. And there is one important thing. If you are trying to look for an SMT, you know, like forcing to see an SMT, that's not an SMT. An SMT is very clear and obvious. All right, price sweeps a low. The other pair doesn't. It's very easy in eyes, right? So you need to practice marking them, right, on the chart, like 20, 30 SMTs, and then you'll understand it, right? But if you're trying to focus in, zoom out, that's not an SMT. That's just FOMO. You're trying to build an SMT so that you feel good about a certain setup. Okay, and yeah, I think that's pretty much it. I hope you guys enjoyed the video, and if you have any questions, please send in the comment section. I'll try to answer all of the questions, and you guys have a good day. Bye bye.